On behalf of Guru KPO, I, Professor B.K. Jain from Biyani Institute of Science and Management of Biyani Group of Colleges welcomes you in this session. The topic for this session is financial intermediaries. It is one of the important components of the Indian financial system. Financial intermediaries play a very crucial role in collecting savings from general public, individuals, business houses, corporates, and converting them into investment for use by those who needs money from financing institutions. These financial intermediaries can be classified broadly in two parts. One are known as banking intermediaries, others are known as non-banking intermediaries. As the word is very clear, here different types of banks are there under banking intermediary, and in non-banking intermediaries they are not banks but they are important financing institutions which are working in the Indian financial system. Now the entire banking intermediaries can be classified into two parts. One are known as commercial banks. Commercial banks can be further subdivided into three parts: public sector banks, private sector banks, and foreign banks. The public sector bank means those banks where public money or government share is 51% or more. Then there are many private sector banks, and then we have number of foreign banks which are operating in India. Now the public sector banks can further be classified into three parts. One are known as nationalized banks. In the initial stage in 1969, 16 banks were nationalized. Then further in 86 more banks were nationalized. Then we have very big group, State Bank of India group. Presently State Bank of India main, and there are 5 subsidiaries of this State Bank of India group. 2 subsidiaries have already been merged with the State Bank of India, and government have as a policy decided that all remaining 5 subsidiaries would also be merged with the State Bank of India. Then there are RRBs which have been specifically created for rural development in the country. Now under cooperative banks there are 2 parts. One is agriculture credit banks, others are non-agriculture credit banks. Agriculture credit banks can also be further classified into 2 parts. One is ST and MT, short term and medium term. Other is long term. In short term and medium term, at the state level, there is a bank known as a state cooperative bank, which is the apex institution at the state level. And at the district level, there are banks known as district central cooperative banks. Under LT, long term credit, there are banks known as state cooperative agriculture and rural development banks. And at the primary level, there are banks known as primary cooperative agriculture and rural development banks. Now, under non-banking intermediaries, there are many institutions which play a very crucial role in the Indian financial system. The biggest one is LIC. You would be surprised to know that the collection of LIC in a year is around 3 lakh crore. It has a huge surplus for investment. It provides loan to different corporates, even state government and central government also getting money from LIC. It was nationalized in the year 1956. Then we have GIC, General Insurance, which was also nationalized in 1972. It deals with non-life insurance. Then we have government institution like Union Trust of UTI, Union Trust of India. Then we have a very big bank known as Industrial Development Bank of India. We have a very big financing corporation which is known as Industrial Financing Corporation of India. And lastly, there is an institution known as Industrial Credit and Investment Corporation of India. I have also mentioned the date on which they were nationalized. Thank you. For further details, kindly log on to www.gurukpo.com. Thank you.